Welcome to Simple Forex. We will try to keep things extremely simple so that it can be helpful in your trading ventures. Okay, today is 10th of December 2025, but this video might be useful for you tomorrow. That means 11th of December 2025, because when I'm creating this video, it is almost a time where US market will be open for another 3 hours, and I'm making this video because I don't see any changes are going to happen today. Okay, the chart that we are examining right now is Euro USD. It's a 5 minute chart, so kind of a ignorable chart. You can ignore it, but see, we are going through end of the year time. End of the year time every year, December 15th to December 30th, is the lowest volume market of all time. So you have to be very careful these times. You will see market volatility without any reason because there is literally almost no volume in the market. So if you want my suggestion, I want you guys to stay away from the market these times. But still, if you have to trade and you are a daily trader like me, so there is something for you tomorrow. First of all, you need to note important news. I am going to give you a GMT timing. Okay, check your local listing. GMT time 13:30. That means 1:30 p.m. There is initial jobless claims. That's a good enough news. Might impact the market. And when I'll do the analysis, I'll tell you where this news can be useful. Okay. Apart from that, at 5 p.m. there is 30-year bond auction that can also be useful for you guys, but you can kind of ignore it. That is not that impactful of a news. Okay, so we start with our analysis today. As you can see, this is a 5 minute chart. Why I wanted to show you this, because of this. Okay, you can see this. This is the range. This is the range. This whole range has been maintained from some days now. So if you are daily trading, okay, you can see this is a 15-minute chart. In daily trade, if you are doing some kind of a day trade, then daily charts, then 15-minute charts are the best instrument for it. Okay, you can clearly see there is a range. This is the range. In the upside, it is 1.16715. In the downside, it is strictly 1.16146. Okay, now if we squeeze this chart and zoom in, then you will see a uptrend, then a sideways movement. Okay, so I want you guys to note this down. Whenever you see this kind of a movement, when uptrend is there and then there is a sideways movement, you have to understand, in this sideways movement you can clearly see this is the range we are talking about. So whenever there is a uptrend and then a sideways movement, market will break out. Now you can say it can break out here above this or below this. So I'm going to tell you that market 9 out of 10 times will break in the same direction that the previous movement was. That means on the, if you're looking at this chart, that will be on the upside. But if you are a daily trader, then you can use this range for short and this range for long, right? Use this point of the range for short and this point of the range for long. But let me tell you, taking any trade here is riskier than taking any trade buy trade here. Okay, taking any trade that is a short trade here is riskier than any trade that is a long trade here. Reason, as I said, if it has to break out, it will break out on the upside. Now, whenever it goes here and you short, there is a risk that it can break out and go up and up from there, right? Then you will be stuck in a short, and if you are a victim of sunk cost fallacy, you will lose a lot of money. So either you buy here or you don't do anything. Okay. Now, question arises here that what kind of a trade can be taken, right? First, I already told you that you can take a long trade here and wait till it reaches here and exit, or you can keep that trade because that trade has a opportunity to break out from here. Now, in what cases it will break out? Breakouts will always need a trigger. Without trigger, you will not see any kind of breakout. Okay. So what do I mean by trigger? Triggers means news. I just told you a few news items. At that time, there is a chance of that trigger is being impactful enough so that upside is breached and you take upside trade. Another kind of trade can be taken when it goes beyond this point and stay above this point. Okay, that means a real breakout, not a false breakout. If it is a false breakout, it will go up and come down. Right? And in the daily trade, you can always take help of RSI. RSI is pretty good. At 25, around 25, you can buy, around 75, you can sell. But in this situation, you only buy, don't sell. Okay. But if you are in a binary kind of a market, then you can also sell from here. But binary options are a different kind of an instrument. Okay. You have to be expert enough. Now let's go and take a look at this chart. This is a hourly chart, and this hourly chart is covering almost 2-3 months. Now you can see this range. The range we were talking about was this range. Now you can understand that there is another bigger range. There is another almost 200 pips range. Okay. But if we go to daily chart, then you will find that that particular range is made after a uptrend. Okay. So it has to breach on the upside, and it will retest these levels 1.18712. But do I expect it to happen before this year end? I don't think so, because see, from the next week there will be very low volatility, and when there is low volatility, or expect almost nothing to happen in markets will abide by their range and act very slow. Okay. So I think this is it. Tell me if you need me to analyze any other kind of a chart and make things more simple. Okay, I'll be waiting for your comments. Take care.